Now, if you've been trying to wrap your head around what's really going on in our housing markets around Australia, whether they're heading into another boom stage, a bust, just a big sideways shuffle, today's Property Insider show is going to help you cut through the clutter. We're halfway through the year, and so far thrown lots of surprises at us, but the property markets have kept defying the pessimists. And in today's Property Insider chat, Dr. Andrew Wilson shows a new data set that's going to give you a good indication of what's happening in all our capital cities. And we're also going to look at what's happening in the major regional markets around Australia as well. So if you want to keep up to date with what's happening in our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know what's happening each week. We're halfway through 2025, and Australia's property markets continue to surprise just about everybody, despite ongoing affordability concerns, relatively high interest rates despite 2 rate cuts, tight rental markets, and never-ending headlines about a housing crisis. Property prices in most parts of the country keep rising. So what's really going on beneath the surface? Have we turned the corner, or is this just a temporary bounce? Are buyers regaining confidence, or are they simply driven by FOMO again? And most importantly, what does this mean for property investors? Is now the time to act, or should you just be sitting tight and waiting for clearer signals? These are some of the questions I'm going to be asking Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market, in today's Property Insider show. Hi, Andrew.
Yeah, good day, Michael. How are you? And
Good.
I'm still bemused at your mention of still negative headlines, but it is what we call in capital letters clickbait. So until the media sort of give themselves some credibility and realise that these headlines are a little silly about house price falls, we'll continue to show the truth here. And we've got some interesting data today, some unique data actually we haven't shown before in this series. And that'll give us a real indication of what's happening in housing markets to the day, Michael. Yes, not backward looking 3 months or 6 months or whatever and craft a story around there. But this model is on a daily basis, so we can really see the trends, how they're emerging.
Well, some of the data houses bring out quarterly figures, and then often a month after that comes that also. So really, as their markets are evolving, as you say, almost on a day-to-day, but definitely a week-to-week basis, one really needs to be in touch with what's going on. So what's different about the data you're going to provide us today?
Well, it is quarterly data as we usually show, and I think you need to have quarterly data because the data sets in a statistical sense can get volatile because you're not capturing enough actual activity in the marketplace. So, of course, we know that house prices differ quite substantially through, high, medium, and low. And if you're not capturing enough of the data, that's enough of the sales, you get that volatility because you may be skewed to one end or the other over a shorter period of time, say a month. So a quarter gives you that fuller picture in terms of the number of observations. So what we do here, as we know with our normal data sets, the ones that we send out every month, we publish the 3 monthly sales data for that particular month, and then we advance it month by month. But it is a quarterly data set. So here, quite unique to My Housing Market, we now do this not on a month-by-month basis, but hey, Michael, we're doing it on a day-by-day basis. So what it means is that every day we can, look at how the markets are performing by updating our quarterly series on a day-by-day basis. And there are some other indices around there that measure on a daily basis. One in particular, I think that's the only one, but that doesn't measure actual prices and it doesn't differentiate between houses and units, which we do here. But the interesting thing when we look at the data is you can really see those trends, how they emerge, and you get a real feel for the energy in the market in the shorter term. And that gives us a lot more confidence to understand where our markets are heading, because if we know where they are up to this point of time, then, we get a better sense of where they're likely to lead, notwithstanding issues such as significant changes to affordability driven by lower or higher interest rates or the seasonal effects. But as I said, it's still quarterly data. So we're getting lots of observations, which we need to give us a reliable data set. or a reliable model, but we're advancing it day by day. So in real terms, we can see how markets are emerging. So shall we have a look at the latest data?
Sure. Before we do, just one other point of clarification, the importance of houses versus dwelling prices, because a lot of data providers provide dwelling prices, but that's not really comparing like with like, where in Melbourne, over a third of all the dwellings are apartments, while in some of the smaller states, it's a much, much lower percentage. So breaking it down to house prices and unit prices makes a lot more sense, Andrew.
Yes, it does, Michael. And the point is there's enough observations with both units and houses for us to be able to do that and still have a reliable data set. And, at the end of the day, it is a completely different environment, houses versus units, and they're, a completely different model in a sense to be measuring. And I think that's important to be able to differentiate as much as you can in terms of the nature of the market while still providing the number of data points, the number of sales that will give you a reliable, less volatile series so you can understand what's happening underneath in the market.
Well, let's break it down state by state, Andrew. Sydney is Australia's largest housing market. How's that going?
Well, it's interesting. We look at the Sydney market. This is the trends back 3 years, Michael. You can see how we had that dip when interest rates increased in early 2022. First increase in 10 years for interest rates, official rates. And then we saw, the downturn, which was a product of sentiment, early days. The market started to pick up, exacerbated through, as usual, the January period, which is the, I guess you'd say, the peak of the seasonal effects of a distracted market through holidays and back to work environments. But then the markets really took off and recovered in 2023 and consolidated last year in 2024. Again, you can see that slight dip in January, February, Michael, which is the seasonal effect. Markets continued to rise last year, not quite as strong through the early part of 2024 or the mid part of 2024 as the previous year. Again, we can see that dipping in January, Michael. That's the seasonal effect.
Yes.
February. And then off and running again this year. So we can quite clearly see that the Sydney market has continued to rise. A little bit of seasonality in April, which we know was a very strong holiday month. But we can look at the overall trend. And the big trend is really since the recovery from those higher interest rates, the market has grown quite consistently in Sydney and is continuing to grow now. And I would expect that to continue to the end of the year, particularly if we get another interest rate cut, which is a possibility rather than a probability. But we'll see how things pan out, particularly given the issues in the Middle East. So I guess the outlook for the Sydney market is rising, Michael, with that sort of data.
Sure. Again, large population growth, not much new stock. And a lot of people in Sydney have got significant equity in their home, which means that downsizes, right sizes, people moving as their families change have got equity. So that at the time when interest rates are making things a bit more affordable means that they've got the ability to pay a little bit more.
And Sydney's typically a very constrained market for new supply, as you mentioned, Michael. It's constrained again by geographical barriers and, nowhere to go except funnel down to the southwest. And that's what we see with the Sydney development profile. Although we're seeing a lot more units being approved at the moment in Sydney, it'll still be some time before they, if they ever do, rebalance the undersupply, which is significant in the Sydney market. The next capital we can look at is Melbourne. And I think it's very interesting when we look at Melbourne because we've been discussing that Melbourne market recently, Michael. We can see the same sort of pattern as we saw in Sydney with the falling away with the higher interest rates in 2022, the recovery in 2023. But from 24 onwards, beyond the seasonal effects that we see in all markets through January, February, Melbourne really flatlined, Michael, didn't it?
Yes.
Through most of the second half of life, it just didn't go anywhere, which was different to most of the other major capitals. In fact, all the other major capitals. But now we're seeing clearly an upward trend in the Melbourne market this year. And of course, this has been confirmed with the highest clearance rates in 2 years in the auction market and continuing to provide solid results for sellers, that Melbourne auction market. So you can see there, Michael, quite clearly the trend is now upwards in the Melbourne market. And that's revealed by that daily data, which is a real signpost for what the outlook is. And certainly I think the outlook for Melbourne is rising.
Well, the Sunshine State, Queensland's done pretty nicely over the last couple of years. It didn't seem to even have the same dip in 2022 that some of the other states experienced.
Well, this is the strength of that Brisbane market and really whole of southeast Queensland. We'll look at some southeast Queensland data shortly, Michael, but you can see there was just once the slight impact of the higher interest rates worked through the system in Queensland, and there was an impact there, onwards and upwards, and really it's been just a steady climb. In fact, quite a spectacular climb last year. We know we had record auction clearance rates in Brisbane at the beginning of last year, flattened out a little bit, which we know also confirmed by lower auction clearance rates, but still on the rise. And I think we're seeing that impact of the interest rate cut in February and to be enhanced by the interest rate cut in May, with prices still rising in Brisbane. So no surprise there, Michael, that Brisbane market on the up and up.
Adelaide was a star performer for a while, even though it seems to have slowed down a little bit lately.
Yes, very interesting, Adelaide, Michael. It was a star performer, very strong growth in the post-higher interest rate period. Just a slight last year impact with the seasonal effects of January, February, similarly this year. But before these seasonal effects, we had seen the Adelaide market starting to go off the boil, Michael, towards the end of last year. We knew that through lower clearance rates, but it is starting to pick up, or it had started to pick up this year again, but then flattening again slightly recently. So I'd say that the Adelaide market is steadying, Michael, after a couple of years of quite remarkable growth. And I think that's just the cycle running out of puff a little bit, where affordability barriers start to push buyers out of the market because of that significant prices growth. And we also know that because it confirms that scenario, because auction clearance rates in Adelaide currently are well below where they were a year ago. Still reasonably positive for sellers in that auction market, but no doubt well below those boom time conditions of a year ago. So Adelaide house price outlook steadying, but again, it will be assisted by those cuts to interest rates, Michael.
And Perth really has been the strongest market in Australia for the last couple of years. Your chart here shows that the interest rate rises in 2022 virtually had no impact on it.
No impact, and there's no seasonal effect either. There's less seasonal effects in the smaller markets anyway, particularly Perth, because they don't have strong prestige markets, higher priced markets, which typically see less activity during the holiday periods, and that's why prices fall or look to be falling. It's because of the mix of properties, not because prices are being discounted. But yeah, it was just blue sky, really, wasn't it? Or has been for the last 3 years, almost non-stop in that Perth market. And we know it's been the strongest of the capital city markets, but very similar to Adelaide, that Perth market, Michael, just tapered off towards the end of last year. And this year it's really been flat until we had that interest rate cut just starting to rise again. I think that, like Adelaide, the interest rate cuts will help to refuel what has been a tiring Perth market, similar to the tiring that we've seen in Adelaide, just starting to pick up a little bit, but certainly flatlined this year, towards the end of last year and into this year, Michael, and not really to do with the seasonality, but just again, after such strong growth, such a lengthy period of strong growth, similar to Adelaide, affordability barriers have started to push buyers out of the market. But of course, with lower interest rates, affordability has improved.
Right. Now, what about regional Australia? What's happening around the regional cities, towns?
We don't usually show regional data, Michael, but we'll put it in today. I think it's interesting to see how our regions are performing. My housing market, of course, tracks housing market activity at all levels, down to suburbs. These are the major local government areas of each of the states. So let's see how they're performing. And these are ranked according to, or they're chosen according to the size of these actual local government areas, because we have to have large enough populations for them to have as I mentioned, a reliable median, a reliable model. So it's interesting that, again, we see the correlation between what's happening in the capital city as to what happens in the local government areas in that particular state. And we can see that clearly, firstly, when we look at the top New South Wales regions. Now, this is the annual growth these are the May quarter medians, but this is the annual growth compared to May, obviously, last year. Top performer, Albury, 14.5. I think lower prices in Albury have activated buyers. Strong results there. Similar to Dubbo, another low-priced, relatively lower-priced market, strong growth. And Newcastle, of course, is sort of adjacent to Sydney, so that's recorded some positive growth. And no surprise, the Tweed is strong, given its proximity to that booming Gold Coast market, and it's very solid growth in the tweet. Just coming back a little bit, prices growth in the regions. I think they'll obviously be enhanced, but there's always a lag between what's happening in the capital city compared to what happens in the major local government areas. But again, mostly higher prices reflecting what's happened in Sydney over the past year. And in fact, Michael, if we average that out, we actually get very close to the increase in the Sydney median over the last year. So quite an interesting correlation.
Isn't it?
Well, by contrast, they're not quite as strong, well, not anywhere near as strong in the Victorian major local government areas. In fact, it's only the lower priced local government areas, particularly Latrobe and Shepparton, which have had growth. The Bendigo picking up ahead of Ballarat, which they usually deal together in terms of growth levels. But it's the higher priced areas that again are underperforming in Victoria, which is the same as what we see in the Melbourne market. It's the inner suburban higher priced markets that have continued to be dragging the chain in terms of activity levels and prices growth. Same results there in the local government area. No surprise that the highest priced of the major LGAs in Victoria, the Surf Coast, has been a significant underperformer there, down by 8.8%. So that's New South Wales and Victoria. Let's have a look at Queensland and look at the difference here, Michael.
Yes.
All the way up the eastern seaboard of Queensland as prices growth. And some of those chronic underperformers, such as Townsville and Mackay, particularly Townsville, are having spectacular boom markets, or have had over the past year. Rockhampton similarly. Toowoomba's been solid regardless, but certainly Rockhampton, Townsville and Mackay have underperformed. Similarly, the Fraser Coast, but strong growth over the past year. Gold Coast still strong, up by 12.2%. But all of the major regions in Queensland have performed strongly over the past year, and even that Noosa market up by 5.3%, which actually understates the very strong performance of the Noosa market over the past 2 or 3 years. And we've mentioned here the revival we're seeing in Tasmania and the Northern Territory, Michael, and we can see that quite clearly, in Hobart and Darwin, and we can see quite clearly that translates into the strength in the major LGAs in Tasmania. They're all in positive territory there. In fact, once again, if we average out those yearly performances, it gets very close to Hobart, which is clearly on the rise. So strength there in all the Tasmanian local government areas, major local government areas. And the same story with Northern Territory, the major LGAs in the Northern Territory, which of course are Palmerston and Darwin, which are both LGAs within that greater Darwin area. Very strong in Palmerston, up by 13.8% over the past year, and Darwin rising as well. So just confirming what we see with our capital city results, Michael, the local government areas are performing similarly. And it is quite interesting how the regions do follow over time what's happening in the adjacent or the relevant capital city.
Well, moving forward, one of the things that's going to underpin property values, of course, is our rising population, growing population, and not building enough accommodation. And all the new accommodation coming onto the market, all the new dwellings, whether they're houses or apartments, are costing significantly more to pull out of the ground. So that's one of the reasons I know my housing market keeps a track of house building costs, just to see what's happening and what's ahead. So what have the latest house building costs shown?
Well, it's interesting, Michael. We do run an index, a monthly index of house building costs, and we know that house building costs exploded when the previous government, or is it the previous government, introduced the home builder allowance, which created too much demand for the available materials and labour. We saw a skyrocketing house building costs. Of course, that added to inflation. It was part of the reason we had to increase interest rates, while the justification from the Reserve Bank, that was one of the factors for housing costs, was high house building costs, because that is part of the ABS housing model, not apartment costs, but house building costs. We did see it starting to level off around about a year ago, Michael, but we've started to see a rise again, which is interesting, and it's not really tracked at the same level as the ABS. I'm not quite sure about that. Our house building costs index is pretty reliable, and as you can see there, it does track what we know are changes to the nature of supply and demand in house building, but just started to pick up again. And I think the other interesting point that you mentioned, Michael, is if we look back to when we did start to see that increase due to the house building or home building initiative from the previous Liberal government, prices are still nearly 60% higher, Michael, than where they were back then. Yes, it's 4 years ago, but still a 60% rise in 4 years is pretty significant in house building costs.
Yes.
And as you say, even though it had flattened off a little bit last year, it still has an impact on supply going forward.
I guess what we're saying is it's not rising as much, but the prices aren't dropping either. So it's now starting from a different level, isn't it?
That's exactly right. And of course, that means you've still got to pay more for your house. And it's a constraint for builders to be able to be profitable, having to pay those higher costs. And when we look at the annual growth rates of the index, we've now pushed up after having looked at the easing a little bit. Given an improvement at the beginning of last year, we've just moved back a little bit. So, yeah, early days, this 1 month has broken through the trend. This is April, 6.5%, but still, nonetheless, another concern there in terms of the outlook for house building costs. We need to, of course, see a couple more months to see if that trend consolidates for higher house building costs. But again, not good news for the supply of housing in Australia, Michael, which certainly needs to improve. And the other points that we've shown, and last week we looked at the building approvals, is that we're starting to see a weakening in house building approvals. So maybe, that's being part of the story of pushing up prices, that the demand's not quite there as it was. There could be various factors doing that, but certainly our data is showing, the most recent data is showing a breakout again in house building costs, which is of, some concern to, the nature of needing more supply. As you said, we talk about a housing crisis. Well, that's a rental crisis, but that all works together if you haven't got enough housing to satisfy the demand in your jurisdictions.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Sure. So while the government and others keep talking about affordable housing, that's just going to be harder and harder to deliver. Now, each week we also talk about the auction clearance rates because it gives us a good indication of how the market is feeling in time, how buyers and sellers are experiencing things on the weekend. What happened last weekend, Andrew?
Well, we bounced back from what was a distracted week the previous week. Of course, we had the King's birthday. I still have trouble with that. King's birthday holiday weekend, which is a distraction everywhere except Queensland, celebrated that. And markets, obviously, the number of auctions were higher, but clearance rates were generally steady. So the market's just holding its own. We've only got, and one of the interesting trends when we look at the capitals, we know that Melbourne has been a breakout performer this year with the auction market. And we've seen there with the daily price data that's reflected in a breakout in prices as well. Canberra's also been a bit of an underperformer, a bit of a stagnant market over the past year or so, but it's now starting to show some signs of a moderate revival. But again, we have to look at the next few weeks. But we've only got really a couple of weeks left in the notional autumn selling season, which goes through till the end of June. So we've got a couple of weeks. And then, of course, we move into the quieter winter selling season. School holidays start in a couple of weeks, Michael. People really start then focusing through that holiday period in July and into August on, an end-of-year strategy for buying or selling. That gives us the September breakout market, which evolves into the spring selling season. So here we are. We're already talking about the spring selling season.
Wow. Yes.
We're getting to the end of the autumn selling season and pretty good springboard into that spring selling season because of very steady results last week in the post holiday period. Let's have a look at the numbers. Sydney, all our capital cities, with the exception of Brisbane, recorded higher numbers of auctions and quite steady results there. Higher in Sydney, 73.7% clearance rate, again higher than where it was a year ago in terms of the clearance rate. Melbourne's the instructive results there in terms of the movement over the past year. Higher auction numbers, of course, but the clearance rate remains well ahead of where it was a year ago, Michael. So again, reinforcing the revival of that Melbourne market. Brisbane, same old in Brisbane. I get lots of questions about why that Brisbane housing market continues to grow and yet auction clearance rates don't show that same energy of growth that we see in the other capital city markets. It's just that Brisbane has a different culture in terms of its marketing campaigns. People sort of engage in a quasi-private sale, auction sale environment. So just because a property passes in at auction doesn't mean it's not sold later for a higher price. Whereas in Melbourne and Sydney, Adelaide and Canberra, a pass-in usually means, some downward pressure on prices after negotiation in a typical market environment. But Brisbane has been strong, similar to other capitals about a year ago, which was a boom time market in Brisbane, as we saw with those daily price trends, but now tracking to more of what you'd call a normalised market environment for Brisbane. The prices are still rising there, but certainly not at the very strong rates that we had a year ago. Adelaide market, we know that Adelaide market, through its price trends, has gone off the boil over the last 6 months, and that's sort of reflected again in clearance rate numbers. A year ago, the Adelaide market was the strongest auction market in Australia, and now it's certainly not the strongest, but certainly in the mid-range of the 60%, and still a reasonable result there for sellers. I would expect those clearance rates to start to rise in Adelaide as those lower interest rate, the lowest interest rate environment kicks in. And as I said, Canberra, a couple of weeks now in a row above, or well into the mid-60s. So once we get into the 70% in Canberra, we would start to get quite serious about a revival in that market, but we need to wait and see. So just looking at the longer term, the monthly trends, Sydney a little bit higher than where it was a year ago, but certainly been a strong start to the Sydney market this year. Very consistent in the mid-70s, and we saw that with the rising price trend. Melbourne, again, confirming just the pickup in the Melbourne market this year. Auction clearance rates have been quite significantly higher than a year ago in every month except April, and of course April was that very large holiday month. Lots of holidays in April, and Melbourne loves a holiday, and there was obviously significant less activity in the Melbourne market, but since then it's picked up quite strongly, and again reinforcing what we see with the prices data. Brisbane, same old this year for Brisbane, but well below where it was a year ago when it was a booming market with those higher clearance rates. Adelaide had the highest clearance rates in the country a year ago, but as we've again discussed, it's flattened out this year so far, but will be enhanced by lower interest rates. And of course, there we go with Canberra, just looking to break out a little bit. Let's see if that continues over the remainder of the autumn selling season, after what's been a relatively subdued period for that Canberra market, particularly in comparison to Sydney results over the past couple of years. If you're looking for the latest auction clearance rate data, you can go to my LinkedIn site, Doc Andrew Wilson at LinkedIn. Every Saturday night at 6 o'clock, we send out the snapshot, capital city snapshots, and then Michael publishes the full national report on his channels on Sundays. Look out for that. It has the regional breakdowns for Sydney and Melbourne, so you can understand what's happening below the capital city level in Melbourne and Sydney, and also the top 10 sales under the hammer. So that's really it for us this week, Michael.
Sure. Well, there's some interesting data and some new data sets. That's fascinating to see how the daily index is playing out. And it's always good just to see what's happening with our regional markets because people often wonder why we leave that out. So thanks for sharing that.
My pleasure, Michael. And of course, when we speak again, it will be the day after the shortest day of the year, and we will be heading towards summer.
Well, you're up north at the moment, and I'm down in this cold Melbourne, so I'm looking forward to that. Thank you very much. See you next week, Andrew. Bye.